We all know that running global-scale multi-cloud applications is difficult and expensive, but being locked into a single cloud provider sucks. That's why our friends at Section created the platform for easy and cost-effective multi-cloud operations. Section actually makes it easier to operate multi-cloud than on your current single cloud. Applications run in the best locations for end-user performance, reliability, and security, and you get to focus on building your apps, not your infrastructure. Visit section.io/cloudcast to sign up for free with no credit card required. You can be running in under a minute. That's section.io/cloudcast.
Cloudcast Media presents from the massive studios in Raleigh, North Carolina. This is the Cloudcast with Aaron Delp and Brian Gracely, bringing you the best of cloud computing from around the world.
Good morning, good evening, wherever you are, and welcome back to the Cloudcast. We are coming to you live from the massive Cloudcast studios here in Raleigh, North Carolina. Hope everybody is doing well, kind of getting to the middle of February 2023. The year is already cruising along. We're more than 1/12 of the way and more than 1/12 and a half. So whatever that is, 10% of the year is already gone. Hope everybody's doing well. Another Sunday Perspective show. I'm getting this one out slightly late. It still is on a Sunday. Usually we get them out first thing in the morning on a Sunday. This will go out closer to lunchtime for those of you in the States. Big day here in the States. It is Super Bowl Sunday. For those of you that follow American football here in the States, obviously a lot of folks wishing it was a holiday because they will typically have Super Bowl parties, maybe enjoy some friends, some drinks, maybe be a little worn out, worse for the wear tomorrow morning. For those of you watching around the world, this is sort of the American version of the World Cup, I guess, if you will, or just sort of big event. Anyways, neither Aaron nor I really have a rooting interest in this year's game. Not necessarily our favorite sport in the world, but anyways, always a big deal. Always fun to watch the Super Bowl halftime show. Always sort of interesting to see how well the game goes, watch commercials, all that kind of stuff. Anyways, Sunday Perspective show, and today's going to be a little different. It's going to feel a little bit like a cloud news of the week because for the last, feels like 5, 6, 7 years, maybe not that long, maybe 5 years, every quarter we will do Cloud News of the Week for earnings season, cloud earnings season, primarily around the big three cloud providers. Sometimes IBM will get thrown in there, sometimes Oracle will get thrown in there. And it feels like for the last 4 or 5 years or so, it has been just kind of on repeat. It's been like, well, the cloud providers did really well. Their numbers are way up. They're up 40%, 50%, 60%, 70% quarter over quarter or year over year. And if you were just looking at a chart, the number looked up and to the right. And I think if we go back a little bit historically, as we started covering the revenue of these, the first real milestone was, hey, Amazon is finally going to break out the earnings number for AWS. It was always originally in the other category. If you were looking on their sort of 10K reporting or their balance sheet, it was never kind of broken out. It was always under other. And at one point, they broke it out, I want to say maybe 2011, 2012. I'd have to go back and look. They broke it out as its first line item when it reached $1 billion. And they finally talked about the profitability of it. It was making kind of gross margin numbers that look like software. And so that really kind of blew away the industry. They got to $1 billion, which again was very, very large at the time. I mean, not very, very large, but was a significant milestone. But more importantly, was the, how much revenue they were making, how much gross margin they were making. And since then, it's always been, there's been a couple of things that we always track. We track growth, we track, kind of year over year growth, quarter over quarter growth. We were tracking as more of the cloud providers started breaking out their numbers, and they still aren't great about it. Google has gotten slightly better, but they still include things like, kind of Google Suite and Google Office, stuff like that. Microsoft is still the worst offender of breaking out numbers. They still include it in their intelligent cloud. So, in essence, we've always sort of tracked like who's first, second, and third. We've tracked the revenue numbers. There are people who track the CAPEX numbers. People track the OPEX numbers, kind of the operating margins, all those sort of things. And, like I said, for a while now, there haven't been a lot of milestones, right? There was sort of the first time that maybe Google did $1 billion. And then, it was, hey, is Azure really catching up with AWS? Are they really a legitimate second place? Could they be, threatening to be first place? Aaron's made a prediction the last couple of years they're going to be first place. But quite honestly, it got to a point where we were just kind of like, yep, they all had another good quarter. Numbers are way up. It's amazing they're growing that fast. And they were ticking up at $5 billion, $10 billion, $20 billion quarters. And you kind of got numb to it because the numbers were kind of up and going to the right, and we didn't do a lot of great analysis of it. And this was the first quarter, the last couple of weeks as they announced their earnings, Amazon's earnings, Google's earnings, Microsoft's earnings, inclusive of those things, in which we saw the numbers not go down. We didn't see negative growth. We still saw growth numbers, but all of them were, for I think the second quarter in a row, they missed their guidance numbers. They were numbers in which the growth was lower, in some cases significantly lower than they had been in previous quarters. And I think, it might be time to do an entire sort of Sunday perspective as opposed to a 2-minute hit on Cloud News of the Week on what does it mean? What does it mean when these numbers are slightly down? Is it just, endemic of kind of the broader economy as a whole? Are there other things for us to start keeping an eye on? And I think we're going to dive into that and look at it after the break. It's here, the 6th annual SysDig Cloud Native Security and Container Usage Report. Get real-world, actionable security insights from companies using cloud and containers from industries around the world. For example, did you know that 87% of container images in production include a high or critical vulnerability? That's up from 75% last year. Or do you realize that companies running Kubernetes clusters larger than 1,000 nodes could save over $10 million a year? With deep runtime insights, SysDig delivers cloud and container security so you can stop attacks without wasting time. You can find all the details by downloading your copy of the report for free at sysdig.com/usage report. That's sysdig.com/usage report. Is your cloud bill out of control? CloudZero is building a platform that will let you analyze your cloud investment faster than ever before. You'll get accurate, granular visibility into your total cloud spend without the typical pitfalls of legacy cloud cost management tools like endless tagging or clunky Kubernetes support. CloudZero is how cloud-driven companies gain more financial control and predictability by driving immediate and ongoing savings. You can answer questions like, how can I save 20% of my cloud bill right now? Who are my most expensive customers? How much does this specific feature cost our business? Join companies like Rapid7, Drift, and SeatGeek by visiting cloudzero.com/cloudcast to get started today. Again, please visit cloudzero.com/cloudcast to get started today. And we're back. And as I mentioned at the top of the show, we're going to dive into the cloud earning numbers, which, like I mentioned, over the last 4 or 5 years, we've really they've just been a footnote. They've been, some bullet points. Yep, they all grew. They grew a lot. It's amazing how fast they're growing. And the last couple of quarters in particular, they've continued to grow. Their numbers are still up. They're still doing very well. We'll get into what the numbers are. But the last couple of quarters, they have been lower than both expectations, but also in many cases lower than the previous quarter. And, so I think it's worth us taking a look at, is this just, a symptom of everything going on, especially in the tech sector, especially with the economy, with certain things going on? Or are there some bigger trends here that we should be taking a look at, some different competitive differentiation, some competitive situations that are worth digging into, and also looking at not just, from the perspective of how much revenue are they making, but what other aspects are worth looking at, especially as I think the dynamics of the 3 big tech players, not just cloud providers, but tech players, is starting to significantly change. We've got different CEOs in charge. We've got different competitive dynamics going on, even stuff that's recently announced. So I thought it would be interesting to take today's Sunday perspective and dig into it in a little more depth. Again, this is sort of 2 data points out of 4 times, 25 or 30 data points that we would have had over the last 5 or 6 years. But again, it's the first time that we've seen the data points start to trend down in a way that looks different than we've seen for a while. So let's sort of dive into that. Let's start with the numbers real quick. AWS's earnings, 24, just slightly more than $21 billion, $21.4 billion for the quarter, still basically on a 82, 83, $84 billion run rate as a business. So continuing to grow, but the last quarter only up 20%. And again, when I say only, again, on that big of a number, still a great quarter, an outstanding quarter for most businesses. But they were down from 20%, from 27% quarter over quarter growth last year. So again, we've started to see AWS slow down, cool down. I'm going to kind of go through the numbers and then we'll come back and look at, kind of the details around all of them. Second, Microsoft announced the Azure earnings. They still don't completely break them out. They're still under the intelligent cloud area, but around 21.5 billion, up 31%. But again, the expectation of how much the Azure earnings are is somewhere in the $16 to $18 billion range, and that still may be slightly high. This is down from 35% quarter over quarter growth for that thing, Intelligent Cloud / Azure. And then Google Cloud earnings, $7.32 billion for the quarter, up 32%, but down from 38% growth quarter over quarter in the previous time frame. So still seeing growth numbers on a quarterly basis, north of 20%, in some cases north of 25 or 30%, which, for most companies, tremendously envious of those types of growth numbers. But again, this is a second or third quarter in some cases in which we've seen the growth numbers be lower than the previous quarter, and also missing those expectations. And again, people can argue, how well expectations are managed. Most private companies, especially public companies of this size, do a tremendous job of managing their earnings and managing their expectations. In fact, maybe under projecting their expectations in order to be able to sort of beat numbers. All three of them were a miss. Now, let's sort of dig through what a lot of this means, just, from a couple of things. Number one, this is, we're getting towards the first full year of a new CEO in charge at AWS, taking over for Andy Jassy, Adam Selipsky, having taken over. Amazon as a whole has been struggling for the last 6 quarters or so. I'd have to go back and look at the exact numbers. So it's been a tough transition. We've seen Andy Jassy taking on all sorts of challenges as the Amazon CEO. We've seen Adam Selipsky really kind of change the direction, it feels like, of AWS, taking them from very much sort of lots and lots of features and innovation to more solution-based selling. Makes you wonder, and we'll get into this, how much foresight he's been able to see about where the economy was going, what he was hearing from both the SaaS companies and the startups that had been so much of their sort of builder side of the equation for them versus what they were seeing from the enterprise. Microsoft, kind of continues to plod along, second place somewhere in second place. A lot of news out of Microsoft this week that's not, maybe it's cloud related, but maybe not in the same sense we talk about cloud on this show in terms of tend to be IT specific. But a lot of buzz this week from Microsoft around Chat GPT integration and OpenAI integration into Bing and the new work they're doing around their browser. So it'll be very interesting to sort of see how much that impacts Azure, not so much maybe from what we think about Azure. There'll be obviously integration with certain capabilities, but how much does this drive up the cost of running Azure? Since obviously, and again, this is where breaking things out gets to be a little bit kind of dicey, but how much infrastructure do they need to buy to be able to do this? How much is this going to potentially impact CAPEX for other things, right? So a lot to think about there. And then Google Cloud, again, still not profitable. Many years into this, I want to say maybe 6, 7, almost 8 years into this, not being profitable on a quarter by quarter basis. It does make you sort of wonder, not does it go away, but does this, especially maybe looking at some of the threats that they're starting to face on the search business, some softness in their business overall, whether it's through YouTube or search, somewhat impacted by things like, the iPhone and ATT and that sort of stuff. How much does Google Cloud become something that they're, not as interested in anymore, right? And I'm not trying to, kind of foreshadow anything that we necessarily know. But again, when things are non-profitable, even if they are, growing at this size, at some point, they are resources that are, not efficient, if you will, in the bigger sense of how efficient everything else is in Google. So, it feels like the first time across all three of these in which we have, a lot of uncertainty about what the future looks like. We don't just have sort of up and to the right. We're not exactly sure how much it's going to go up and to the right, but, different competitive dynamics between the three of them, different leadership than we've had in the past. Some question about leadership, like at Google, people calling for, is Sundar Pichai the right CEO at Google? We've heard that from a number of people. So it really feels like the first time in a long time that there's a lot of uncertainty, in their businesses themselves. And then we look at sort of the macro things that are going on. Obviously, we've seen increased interest rates. So that's going to have an impact on not only their ability to continue to buy and grow CAPEX at the rate that it has. And Charles Fitzgerald does a great job over at Platformnomics. We put the CAPEX spend numbers in the show notes. You can go take a look at that. But we're going to start to see that have some impact, and that'll have some impact on, how much availability is there. We don't always know how much of the CapEx spend from these major companies is going to the cloud providers. We would expect it's a large percentage. But we'll start to see, that start to have an impact. How much does the uncertainty of what's going on at Intel impact these types of things because they're buying from them? How much do they move to AMD, either AMD or to ARM? So there'll be a lot going on there, looking at that. We've seen over the last year and a half, and Aaron and I mentioned it, from KubeCon this last year. We've seen it from the people who are sponsoring this show and some of the conversations we've had. There's been a very, very distinct effort across the industry to look at over the last, so I'll call it 6 quarters or so. How do I take cost spend? How do I bring my cost spend down? How do I optimize my cost spend? How do I look at maybe replatforming to ARM? How do I look at not doing as many CI and CD runs? How do I look at not doing analytics over 9 months of data? Maybe it's over 2 months of data or 2 weeks of data. So we're starting to see a lot of, focused effort around cost cutting, cost optimization, cost reduction, cost avoidance, for cloud and cloud spend. And we've seen it and heard about it in different areas. I don't know that we've seen it in the repatriation way that A16Z and certain companies want you to believe, but we have been distinctly seeing that quite a bit. So how much will that have an effect on it? Obviously, the interest rate thing is having a big effect on any venture-backed company. So, the venture-backed companies, the investments that have been made by VCs were based on sort of previous interest rates. As interest rates go up, their expectation of, them not burning through money as fast as they were, becoming profitable faster. That's again having, sort of downward pressure on spend at a lot of these companies, whether it's tech layoffs, which we talked about last week, or just how much they're spending. How can you get rid of a bunch of unnecessary SaaS services that you're using? How can you cut back on the number of licenses that you're using? Do you have to be using all those things? Can you get away with certain things? So we're seeing, that be, kind of a deflationary thing on revenues, but all, spend from the company's spending, but, that has a downstream effect on both the SaaS companies, and obviously then the SaaS companies has a downstream effect on the underlying infrastructure cloud provider. So a lot going on there that are going to be interest rate related, economy related. When your customers are uncertain about what's going on, it becomes very unsure of, what you're going to put in. Now, one of the secondary things that'll start to have is you'll start to see less and less, and this is, not sort of like, oh, this is unique insight into the cultures of the cloud providers, but just, less and less of, hey, we're going to come out with tons of new features that maybe only a couple of companies want, and we're not really sure how we're going to monetize them, but it would be kind of cool to see if we had that, or, hey, this one company's asking for this, and you're going to see doubling down of, less on innovation, just because you're going to have more and more sales teams who are saying, look, I need stuff I can sell right now. I don't need stuff that you're announcing right now that's not available for a year. It's going to distract my customer. It's going to distract the sales cycles. We need more stuff that A, we can sell right now, and B, more stuff that, for customers, they're not going to prioritize or maybe necessarily fund those fourth most important, fifth most important, sixth most important projects. They're looking at the ones that are, first, second, and third most important, can have near-term impact on, helping their business stabilize, grow their bottom, top line, grow their bottom line, be efficient this quarter, be efficient next quarter. So you're going to see a condensing of, where the spending goes to. Innovation sort of takes a back seat to other things: security, cost cutting, stability, kind of known things, as opposed to, a lot of the, hey, this is a moonshot project. This is a, something a year and a half ago, where we can invest because money's cheap and things are going great. When you have uncertainty across the system, everything tends to get fairly tight, and things tend to get fairly tight fairly quickly, because what happens is uncertainty leads to more uncertainty. You've got are my customers spending? Oh, I don't know if they're spending. Well, if I don't know if my customers are spending, I don't know what kind of revenue that means. It means I may have to be conservative in my forecast for marketing spend, sales spend, whatever sort of travel and, travel budgets, those types of things. And you start to see this sort of general contraction because not necessarily the business is bad, but because the business is uncertain and people tend to look for certainty, right? So they look for certainty in what their forecast models look like. They look for certainty in the stock market. And when there's not certainty in these things, the whole thing kind of goes. And this is where, as much as an Amazon or Microsoft or Google has been at the center of so many things being tech related, so many digital transformations, they're also going to be at the center of any sort of pullback, any sort of tightening, any sort of contraction, any sort of uncertainty that happens because so many things are now tied to the services that they touch. Obviously, we talked about layoffs, and then I feel like the second part of this that's going to be even more interesting is we get through economic ups and downs. Those things tend to happen, right? And sometimes those things drag on for 12 months, 18 months, whatever it might be. But they also, when there's signs of light or when there's that certainty starts to stabilize a little bit, or if we start to see interest rates sort of, either pull back or get stabilized and a new normal is set, we're going to start to see people try and get aggressive. Because again, if they're in a good position, they're going to try and get into a better position. But I think the other thing that's going to be really interesting is, we've seen this run for 5, 6, 7 years of the cloud providers just trying to grow essentially, right? And kind of competing against each other, kind of carving out their own niche. Amazon was sort of first, Azure was sort of second, Google third, trying to carve out a niche around data and AI and ML. Microsoft or Google or AWS trying to be this sort of, everything to everybody, the everything shop just for builders. And Microsoft, again, targeting enterprises, but then sort of dabbling around developer types of things with GitHub and other stuff like that. And I think what's interesting is, these businesses have become really important in different ways for these companies, right? So if we think about let's start with Amazon. AWS is not necessarily the largest revenue generator in Amazon, but it's the largest profit generator, right? And so the importance of AWS with Amazon is extremely high, right? Maybe number 2 to retail. Some would argue maybe even number 1 to retail. If we kind of move over to, somewhere else, you look at Microsoft, we talked a few episodes ago, Microsoft is just now reaching the point after 10 plus years in which their cloud business is, equal to their software business, right? And we're seeing them, be fairly diversified in what they do, right? They've been in gaming, they've been in software, they've been in collaboration. We're starting to see them make a big push around chat, around Chat GPT, around OpenAI, and starting to make a new push around search, right? So it means that it'll be important for them to have a very stable foundation of their cloud, but they're now, competitively and dynamically going after Google's business, right? So what does that mean? Well, we don't totally know. Does that mean that they have the resources to be extremely focused on Azure and extremely focused on, Bing and going after Google? What does all of their efforts in gaming mean for them, right? They're very good at being diversified, but again, where does cloud fit in that diversification? Because they're now, very clearly have many other things that are going to be very resource intensive, right? They've spent a lot of money recently on gaming. They've still got some uncertainty around their gaming stuff. They now introduced this new, really big focus area. They've got Satya Nadella saying, we are going to war with Google search. Where does cloud fit in that, right? Before it was obviously very important. It was part of their transition from, box software to delivered software services. Now it's going to fit into one of many diversified types of things. And then you look at Google. Google obviously, has, way overhired as many Silicon Valley companies do. They're trying to right size that. They've had some struggles in terms of, certain growth areas. But YouTube is beginning to do very well. We're starting to see a lot of things happening with them around media. They're still the 100,000 pound gorilla in search. But, we are seeing things like, articles written about, hey, red flags are being raised around Google about, hey, has search, kind of gotten stagnant? Has it sort of lost its innovation? And so it does make you sort of question, especially if people like Microsoft are going after it, people that have very, very deep pockets, will cloud continue to be, especially as a, essentially loss leader, non-profit, not making a profitable contribution to the business? Will that continue to get, the same sort of support it's gotten in the past, right? I mean, there's been questions about it in the past. How much resources it take up? Are those computing resources, CAPEX resources that could be doubled down on, and put back towards, reinventing search or whatever comes after that? So again, a lot of uncertainty that maybe we didn't necessarily have over the last 4 or 5 years, because stable businesses, monopoly businesses, kind of didn't have a secondary thing that was facing them, didn't have interest rate pressure that was going to, bring into question more about where do you make big investments, not just sort of incremental investments. And again, the leadership dynamics have changed, right? Satya Nadella is now in a very, very comfortable position. He's starting to make very, very strategic decisions. AWS and Azure, AWS and Amazon have essentially 2 new leaders in very different positions than they were a year and a half ago. And Google, now going through, what's the right leadership model there? Is it the right leadership model? So a lot of questions about kind of all 3 of them. So I guess the good news, if you're in IT, a couple of things. Number one, they still continue to grow. They still continue to be showing innovation. They still continue to watch each other and will compete. So that type of competition will be good from an innovation perspective. We have seen a number of really smart people from all of those companies leave and start to go do other things. So, there's always that brain drain that happens. The other thing is, if you're a company looking at some of this stuff, this is distinctly an opportunity for you to flip the table on those cloud providers and start to say, hey, I may have some more leverage over my buying than I did in the past, right? Where you were, yes, you could leverage somewhat of how long you buy for, how much you buy, how much discount you can get from that. But as they're struggling a little bit, and they're going to be looking to, make sure they can make their quarterly numbers and, hit expectations that are going to be, bigger than they were before, there may be some opportunities for you to, look at renegotiating your pricing, renegotiating the length of your pricing, renegotiating how much is prepaid, how much is guaranteed. So, definitely some opportunities there, especially, as the tools to help do cost optimization become more mature. They're at your disposal in all sorts of different ways. So there's going to be a lot going on there, both from just an industry watcher's perspective of how does it shake out between these 3 giant companies, but also as a customer starting to think about, are we reliant on, all the innovation? In which case, some of that may slow down. You got to think about, how are we going to get over the hump of that? But probably more importantly, what leverage, do you now have that's different than a quarter ago, 3-4 quarters ago, in terms of you being able to maybe set the terms a little bit more for what you're spending, how long you're spending, how much you're spending, what you can ask for, and those types of things. So, and then I think lastly, we're going to start to see, again, sort of a renewal of people saying, hey, is multi-cloud important? Is moving an application from one place to another important? Because, people are going to have different risk profiles, different feeling comfortable profiles with the different cloud providers, what they're hearing from them, and all that sort of stuff. So, whether or not that, brings up a new set of interesting technologies to help, do migrations and other things. They could be from data center to cloud. They could be from, one cloud provider to another. They could be cross-cloud types of things. But I think we'll see a renewal of that as well, just again, because the dynamics are changing. And again, people are looking at both near-term types of problems they're trying to solve, but also starting to figure out, can I think ahead of what's going on? How many signals am I getting from the cloud providers about how important is the cloud to them? How important is my business to them? Where are they potentially, focusing or reshuffling resources to try and compete in the bigger set of games that they're playing in the marketplace? So lots to think about, lots more than we've talked about for the last, what feels like 3, 4, 5 years, where everything was just, again, up and to the right. It's going to make it really interesting. It's going to create some uncertainty. Probably going to see some moving around of people and names, and maybe some big hires moving from one company to another. So exciting times. Cloud's always fun. Hope everybody enjoyed this a little bit. Just thinking about it a little bit deeper. What could some of these moves mean? What are some of the things they might do? And just thinking about it both near term and long term, because these revenues are now. They have different levels of importance to the different companies. And again, we've always tried to highlight that, but I think, this is another inflection point in which, it's important to think about, what might happen. So with that, I'll wrap it up. Hope everybody has a good Sunday. Sorry, the show's slightly out slightly late, which means some of you may not listen to this because you'll be prepping for the Super Bowl or whatever. But anyways, February's been great. Thanks everybody for listening. Thanks for telling a friend. Thanks for helping us grow the show. And if there's things that we can help you with, whether it's, personal feedback, mentorship, introductions to people, or just, topics and ideas for things you want to hear on the show in the future, please let us know. show@thecloudcast.net. With that, I'll wrap it up, and we'll talk to you next week.
Thank you for listening to The Cloudcast. Please visit thecloudcast.net to find more shows, show notes, videos, and everything social media.